Tech companies are facing scrutiny from both Washington and Wall Street. According to the Wall Street Journal, Google has fired several of its lobbyists amid possible threats of an antitrust probe. This while a note from Goldman Sachs today warns investors should reduce exposure to any stock that becomes subject of an antitrust lawsuit. Joining us with more is Dan Howley. So Dan, what is going to be maybe the new Google strategy here?
Yeah, the new strategy is basically watching its back, covering itself, making sure that it has lawmakers on notice that it doesn't believe it is an antitrust in violation of antitrust laws. They're paring back the lobbying that they had previously done to kind of help grow its business, its search business, its Gmail business, its Android business, putting studies forward or funding studies for think tanks and universities to make sure that Google's best foot was put forward. Now, this only has to do with Google itself, apparently. Alphabet wasn't mentioned. That includes things like its Waymo self-driving unit. This is Google specifically, and the reason being is because obviously they're the dominant search player as well as the dominant mail player, but they really want to kind of make sure that they're not going to be on the receiving end of any antitrust matters. And really, I don't think they will. I don't see a breakup of Google happening, breaking into a search business on its own and a mail business on its own. Really, what is more realistic is the idea that there would be privacy regulation coming that would hit Google, that would hit Facebook, something similar to what we have or what they have in Europe for the GDPR, where they could face steep fines for violating privacy laws there. We could have that here. We're already seeing some states look into it. California passed something along those lines that that's going to go into effect shortly. So companies want to kind of get ahead of that, make sure that they have a voice in how that's crafted. But I really don't see the antitrust matter going forward as far as Google goes or even Facebook. I think it's more just posturing on politicians' part.
All right, thank you, Dan. Let's go to the panel for more on this. Emily, it seems like there's certainly a lot of talk and there's a lot of push, even if it's not antitrust, for some sort of regulation.
Right.
Do we get something, even if it's not that, maybe?
Well, I think right now what Google is doing with paring back its lobbyists and that lobbying operation is really just about the optics, looking like they're trying to decrease their foothold in Washington. If we think about all the big tech firms, Amazon, Google, Alphabet in 2018 had 100 lobbyists, spent $21.7 million. That's just astronomical just on, lobbying.
They spend more than any other company.
That's correct, the top U.S. firm.
Friend of lobbyists.
Right.
Yeah.
This is PR, yeah, it's optics, as Emily mentioned. And look, I do think that if we see something, and yes, when all this noise keeps coming, you start to at least get convinced that we'll see something. But it's not going to be breaking up the companies. It's not going to be the Elizabeth Warren battle cry. And if there's some form of regulation, I do think you're going to see the companies involved in the process. That is, they will succeed in what they've been trying to do, which is, here, raising their hand, we'll help you regulate us. Yes, we need regulation. Let us tell you how to regulate us.
Yeah.
And so, similar to the shifting narrative about a trade deal between the U.S. and China, where now you're starting to hear more people say, all right, we're not going to get a full deal like we hoped. Even if there is some kind of a deal, it's going to have to be a little bit of a concession. Any form of regulation is going to be pretty light.
Yeah, but this all started with an advice not to invest in these companies that might face an antitrust suit. Sounds to me like you can ignore that advice. What do you think?
Well, we don't
At your own peril?
Yeah, we don't dispense stock advice, from us, the reporters. But I would say it's very simple. If you were bullish on certain of these companies before, I don't see much reason to no longer be bullish on them, with the exception of Facebook. But with Facebook, it's not because of the government regulation concerns. It's because of the general sentiment among consumers. It's been totally destroyed.
I want to bring up something very quickly on that, because the Wall Street Journal is reporting today that the company, Facebook, uncovered emails that seem to show that Mark Zuckerberg maybe knew more about the problematic privacy practices at the company.
Well, he does, Spectre. It's a fake video.
Yeah, the deep fake
yes,
video.
Not the deep fake video. We're talking about a real thing potentially in the Journal today. So.
No, well, what I was going to say is that just this idea that, antitrust regulation or things like that, they aren't going to actually impact the consumer, the top line growth. Consumers are still going to be using the companies. They might have more costs because of some of these, payments that they'll have to pay to the government, but it's not like it's going to actually stunt growth, is what a lot of these analysts are saying.